Hi, my name is Brad Lamensdorf. I'm the CEO of Active Alts, and I'm here to talk about an indicator that we use internally, which helps us with our exposure gauge for our long short strategies that we run through activealts.com. The strategy is long and short, and there's always decisions to be made on how much long and short exposure that a fund should have. We were able to quantify this into an indicator that we built with Sentiment Trader, and we're very, very happy with the results. And this is one of the things that help us power our returns for our long short hedge funds. The reason that I'm sharing this today is that this is one of the most unique readings that I've seen in this indicator that we built in quite some time. Currently, it's 50% long and 50% short. So it's really, really in a defensive position. As you can see on the next chart, the forward returns, 1, 3, 6, 12-month type returns are very, very poor after you get these type of signals. So we're very, very defensive in what we want to do with our portfolios. We have a lot of cash. The positions that we are holding, we're hedging. And the thing that really makes this indicator so much more valuable than a lot of the other indicators that I've seen, I've had over 30 years experience tearing apart other people's indicators. There isn't one thing that drives this exposure. There's well over a dozen studies that Jason and I have put together to put into this exposure gauge. So there isn't one thing that can move it in one way or the other in too far of a direction. For instance, in coming into last year, it was, as you can see, it was very, very defensive, not just necessarily because of COVID, but because there was a lot of things going wrong with the market while it was hitting new highs. Too much bullish sentiment, the breadth wasn't consistently there. Some of our price oscillators had reached maximum overbought positions. So when we start seeing that type of warning signs, these indicators will start diving to lower and lower levels, making sure that your exposure isn't so high at the riskiest times. If I had told you that the least riskiest time to invest this year was in March, no one would have ever believed that that's really what ended up being the best time to buy stocks. And so buying stocks and being able to invest money at very, very fearful times is what this indicator starts helping one with, and it really helps us guide the long short. We've been talking about the sentiment gauges over the last few weeks being overly optimistic. This week, they also came out again, even higher than they were last week. So along with this gauge being so negative and along with the sentiment gauges being so optimistic, the statistical odds of making money going forward are been reduced dramatically. If you're more interested in any of this type of stuff, we have it all at lmtr.com and activealts.com. We run the long short strategy through Interactive Brokers, and we publish things there too. Thanks so much for your time.